Thank you for joining me. I'm Alex, and I would like to have a look at Shake. And that's because they dropped 20% today, which is a nice drop. And they basically dropped for no good reason, which means it's a good time to have a look. So what they do is they make restaurants. The restaurant is called Shake. Current price is $66.83, which gives them a market cap of $2.7 billion. Dividend is 0. I don't expect that to change anytime soon, especially with the previous year being a net loss for them, and they had another losing year in the past 4 years. So definitely not consistently profitable, but profitable in the last year and the trailing 12 months. Revenue is currently $460 million, which is up 30%, and earnings $15 million, which is up negative 800%. So they went from a loss of $2 million to earnings of $15 million. So going the right direction there. And in the trailing 12 months, they also had a net profit of over $15 million. That gives them a PE of just under 100. Total assets $600 million, total liabilities $300 million, and total stockholders' equity up 20% to $273 million, which is definitely not terrible. A balance sheet like that is pretty nice. So to get into the reasons why they dropped, the numbers were better than expected for this year, but the outlook was worse. And on top of that, they said that they're going to remodel a few of their restaurants, which would close them for a time, which would obviously also decrease their revenue. And so the market took that in a very bad way. However, I don't think it matters, because I don't think that anyone should buy the stock anyway. So revenue going in the right direction, earnings going in the right direction as well. But the PE of 99 is just way too rich for me. Balance sheet looks good. No dividend, but everything is good except for the price. And because of the price and because it's so high, I don't think I can recommend it. PE of 99 means that at a growth rate of 30%, they would need a significant number of years before, like, they would need over a decade before the PE is somewhere in the range where I would buy it. However, seems like they're making a profit right now. If they can pull off the same profit next year and the year after, then I would think that it's a reasonable company, but again, not for the price. So if that drops to I would probably buy it at like $30. I definitely would not buy it at 65. So if you're a dividend investor, obviously not the stock for you. If you're a value investor, definitely not the stock for you. If you're a growth investor, I think that this stock might have merit if you know more about it than I do. So remodeling tends to be a good thing, because obviously they did the math and decided that it was worth it. So if they can grow their revenue at a significant pace, maybe open far more restaurants than they have, then I think that as a growth stock, this might actually have value. But for me right now, the PE is way too high and the profit not consistent, so I don't know how much growth is really expected over the next 5-ish years. So if you want to look into that as a growth stock, I think you should. But I don't think that it would be the best option out there. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.